Good morning, friends. This is Ian here on a Saturday, 24th of October 2020. Welcome to Ian's Trading Talks. So, you must be wondering why I am here on a Saturday on a weekend. I am here to discuss on the data that you can see on your screen how to analyze FII and DII data for to take your transactions, take your trades for the week or of a particular day. Now, this is my interpretation, my way of analyzing FII and DII data, and you can have your own way, or others can have their own ways of analyzing the FII and DII data. Now, for the beginners or for those who are new to trading markets or those who do not know what FII and DII are, FI is foreign institutional investors and DIIs are domestic institutional investors. FI is also classified under foreign portfolio investors, FPI. नाउ वी नीड टू अंडरस्टैंड हमें ये समझना पड़ेगा कि FII है क्या. FIIs and DIIs are basically institutions and those who invest into Indian markets and also into various markets. Now, institutions typically invest into the stock markets and also retail customers invest into stock markets. But the investment or the trading done by retail traders are comparatively very less. They are about less than 5% into the markets. In the recent months, maybe the retail participation has increased, but institutions, especially foreign investors, have always invested more, and their power in investing is always high. They invest from US, from Canada, from European countries, from even from Arabian countries, from Japan, from China. So they're bringing a lot of money. They're bringing a lot of power. Also, our domestic institutions like mutual fund, insurance companies, various private institutions also invest into the Indian markets. So the money that they bring in, the cash that they bring in, moves the markets, move our markets. So ये हमें पता होना ज़रूरी होता है कि वो उन्होंने कितना पैसा लगाया और कितना पैसा निकाला, क्योंकि जितना वो पैसा लगाते हैं और जितना निकालते हैं उसके ऊपर हमारे मार्केट मूवमेंट डिपेंड करता है. और एक और बात ये जानना ज़रूरी है कि गवर्नमेंट की नज़र इनके इन्वेस्टमेंट और इनके डिसइन्वेस्टमेंट की इनके सेल के ऊपर लगा रहता है. तो ये बात अगर आप समझ रहे हैं, अगर इफ़ यू आर अंडरस्टैंडिंग दिस पार्ट, देन यू शुड नो दैट जस्ट लुकिंग एट देयर बाय एंड सेल डज नॉट हेल्प अस. सो लेट अस सी वन पर्टिकुलर site on NSE. Here you can see that on 23rd of October, DIIs have bought 3705.80 and sold 4597.66. In the net, they have sold 891.86. FII and FPI have on 27th October bought 6024.92 in crores and sold 5117.99. That is, on a net they have bought 906.93. Now if we look at this data, we do not know how much they have bought in cash or how much they have bought in cash or how much they have bought in futures and in options. So broadly, our market can be classified, our stock markets can be classified into cash market, into futures market, and to options. Now, now in futures, you can again invest into index, which is currently you can invest into Nifty and into Bank Nifty. Similarly, you can also invest into stocks, stock futures. Similarly, for options, again, you can invest into index, again Nifty and Bank Nifty. And again, here you can invest into stocks. So we must know the data for of FIIs and DIIs into all these three categories. So what we can do, we can break down this data. We can understand where FIIs and DIIs are investing separately for cash, futures, and options. So we will what we will do, we will download a particular file. We will go to this place, NSE India, all reports derivatives. I will share this link later on. At or on EOD, this is what I do. I download this FNO participant wise open interest CSV on a regular basis. This you can save at any place on your desktop, or if you want to be more disciplined, you can save it in your folder and open it. You can save it as a Excel file also. So here you will get four client types: client, DI, FI, and Pro. So one second, I think you are not seeing. You will have four client types. You will have client who are basically your normal customers. They can be your retail customers also. They can be HNIs also. Those who invest through brokers. You can have Pro. These are brokers who have their own prop desk. You will have FIIs and you will have DIIs. Customers also. So this is the report that is saved. You can save this report. You can see this report in front of you. So this report has been saved. As you can see, that there is four client types here: FNO, DI, Pro. What I do is I only selectively have choose the option data, because I choose on Nifty's I maintain this file, and first of all I check whether on whether in the options whether they are bearish or bullish. So I can create another file. First of all, what I check is whether in the options they are bearish or bullish. Say for example, for 23rd of October, uh, I will go to the file that I have created. That file I have downloaded. here I will select the option index data for all the clients and paste it at the selected options: call long, call short, put short. So I will provide the logic behind this and explain to you. This is for the options for Nifty or Bank Nifty. This will tells me whether the particular stock is bullish, particular the client is bullish or bearish on certain aspects or not. Now pay attention here. Now, as we know that if you buy calls, if you go long on calls, you are bullish, and if you go short on put, then you are bullish. Similarly, if you are long on put and short on calls, then you are bearish. So what we do, in this case we would do an addition of long calls and put shorts to get this value. So if you see, if we add, we get this value 161. Okay, and if we add these two values, we get this value, and then what we do, we add subtract the bullish and bearish positions to get net positions in here. So for yesterday's values, we see that clients are basically bullish, and FIs, DIs and pros are basically bearish. So we can put this in the Excel that if G2 is greater than, that is if the bullish positions are greater than the bearish positions in net, then it is bullish, and if bullish positions are less than the bullish positions are less than the bearish position, then it is bearish. So we can find out from the options data in the index, whether it's Nifty or Bank Nifty, whether the particular entity or the type is bullish or bearish. So from this we can gather that FIIs and DIIs are bearish on index, So instead of saying that FIs are bullish and that they are buying, we find out that FIs are in fact bearish on index. We will take this case further, but at the moment we return back to the data that we have. Okay, so here we have in fact uh, done with this particular data. Now we move to the futures data. Now futures data, again what we do, we can just long minus short, we can do simple addition subtraction for all these classes. Now we can see the clients are taking a lot of data, and FIIs are here. So we can say that client type, maybe the retail customers are taking a lot of contracts, but here it is only the number of contracts. We are not talking about the value. In value terms, obviously FIIs and DIs will be much higher. So we start looking at other aspects. We start seeing that here uh, here the DIIs are selling off in futures, while FIIs are in fact bullish on futures index. So we can assume that they are taking counter positions in index. They are bullish on index futures, but they are bearish uh, on uh, options. Similarly, we can do add minus here for future stocks. So and we can find a similar correlation here, that DIs are selling in stocks, while FIIs are buying in stocks, even though the contract numbers are less. So this number can also state that how much they are putting their money in, and we can do a similar sort of thing for uh, options futures, options in stocks. We can do a addition of stock longs and put shorts subtracted by the put long and stock and call shorts. So we get values. We can see that again here the FIs are short on stocks. So we can say that they might be hedging their transactions in options and stocks with taking long positions in futures. So this way we can analyze in a rough manner whether they are taking where FIs are taking positions, whether they are taking positions uh, whether they are taking positions in futures or so net what we get is that FI, if we do total only on FIs, we see that they are in index future futures futures they are positive, means they are buying in index futures. Index, an index could mean again Nifty and Bank Nifty. So index options, they are negative, that is they are selling there. They are option option futures, again they are option futures, they are again they have taken positive, that is they are buying in option futures, but in option stocks they are buying, but options futures they are selling. So this is their and in cash they are obviously positive. So whenever they take a position in cash, it means they are always positive, and it means it is good for that particular stock. They are taking long view in that. So this is my view of FIIs, and if we take view of DIIs, they are negative throughout. They don't have much positions in DIIs are in the and if you look at DIIs, they are negative in futures index, negative, and futures and in options obviously index they are negative. Stocks futures they are negative, and options they don't have much positions, but they are negative there. So on a net DIs are negative. FIIs are hedging their positions, so they are still careful of the market, and they might if the market falls, they might close their long positions and save their trades. Clients are the ones who are taking a lot of contracts, so and they are selling at times. So that's it from from me on doing DII and FII analysis. This is my view, and this is how I maintain my files. I hope that you can also maintain your files in this manner. I have maintained it since quite long, from June, and you can see what positions FIIs and DIIs are carrying. If you look at my chart and I show only FII positions for long, you will see that FIIs have been bearish and have been bullish only once. So on index, so they have been long-term bearish. DIs are also bearish, so you should keep this in mind. Even that currently the up move in index is due only due to the up move done by the clients, because they have been bullish throughout, and once the funds run out of the clients or the funds are put into some other place, then market might crash. So overall my view at the moment is negative. In a future video I'll be telling you, I'll come out with what are the telltale signals of market crash, where I will discuss how one could have predicted a February March crash even without the COVID, even without COVID coming in. Uh, because COVID was just a trigger, the market reaching its highs and then coming down because of various factors, without various economic indicators were responsible. I'll take examples of many crashes that happened from way back in 80s till in the foreign markets, and then in 2008, then one as recent as after the Indian elections that happened. So I will discuss all those things in a future. Yeah. But I'll bring it as soon as people start liking, as soon as you promise liking my videos. So if you like this educational video, kindly do press the like button. Kindly share this video. Kindly comment on what you think was good or bad, so I can improve my future videos. Thanks a lot. This is Ian calling from talking from Ian's Trading Talks, and have a happy week.